Welcome back to another YouTube video. Now in today's video I'm going to be analyzing the index market. Now I'm going to be analyzing two pairs, 75 and 75 on S. Now stay with me till the end of this video. I think you will have learned a lot through our market analysis. Now for those who haven't opened up an account with Deriv or Binary, hit the link in the description and open up your account with Deriv to start trading these volatility indexes. Now the first pair I'm going to be analyzing is 75 1S. Now 75 1S is another nice volatility index you can trade to make money. Why? This we find this pair to be so trendy. If it is in a downtrend, don't even take your time or waste your time looking for sales. If it is in an uptrend, don't waste your time looking for sales, yet you must be looking for buys. So if you master trends in trends, you can be profitable on this particular pair, volatility 75 1S. So that is the tip. Now I'm already in my higher time frame, which is the daily time frame. Now in this daily time frame, what we do is to get a clear picture about where this pair exactly is it heading. Let me also first delete this. Now you can see when you come backwards, this pair has been in has been in a downtrend for a long time. Why? We can spot it has been making high lows and lower lows, low highs and lower lows, low highs and lower lows, lower lows and low highs. So it has been a downtrend for a long period of time. But as you know, the market keeps on changing. It reached at the moment and we experienced this falling wedge. Remember, falling wedge is one of reversal patterns which tend to change the price of the market, and you find the market which has been in downtrend, it has changed going back to an uptrend. Now after when we experienced this falling wedge, price broke up and retested. Prices kept on pushing. We had this support level, prices broke this support level. We kept on pushing, making high highs and high lows, high highs and high lows, high highs and high lows. Now these levels which I have tried to see me highlighting with horizontal lines, or these levels, these are major market key levels. Why do we call them major market key levels? Prices of different, it can be indices or currency pairs or these indexes. We know that whenever the market reaches these particular areas, we are expecting a lot of reversals. You get? So we know that whenever the market approaches these particular areas, we expect a lot of reversals. So that's why we try to highlight them and we tell you these are major market key levels. Now you can see that prices have so far broken 1, 2, 3 major market key levels, and this was our last major market key level. Now after the price is breaking this major market key level, we experienced a inverted hammer plus a bullish engulfing candle. Remember, we are in an uptrend. Now due to the fact that we are in an uptrend, if you see an inverted hammer on a support level, that means we still have pressure from the buyers. So if I try to highlight this and I try to zoom out, you can clearly see that we have an inverted hammer on support plus a bullish engulfing candle. So that means all these are confirmation to tell us that the prices are still pushing up to the upside. So that means every trader who is trading this pair must not focus on selling. You must focus on just buying or getting those buying entries. Now after getting our candlestick confirmation, we scroll down to 4 hour, because you can clearly see that we have already broken our resistance level. Now when the resistance level is broken, it becomes a new support level. Now we are going to scroll down to our for our time frame to get a clear picture or to get perfect entries on this pair. Try to zoom out. This is hour 4. Now when you reach on the alpha time frame, you can clearly see that if you try connecting these recent higher lows, you can clearly see that this pair is so trendy due to the fact that we are still in an uptrend. Now only if this pair to go in a downtrend, you must see prices breaking this support trend line of ours. After breaking it, they come back to retest, then you will see prices dropping down to the downside. There we can be with the confirmation that the trend maybe has changed. This pair is gonna sell, but at the moment we are expecting a lot of buys to jump in, a lot of buyers to jump in the market. Now we are trying to spot for a nice pattern we can go in order to jump into the market. Now if you try to zoom out, you can see we have this recent broken lower highs and this hellos. Now remember, if we are in a trending market, we must also look for continuation patterns. Now at the moment I've spotted a nice falling flag, Now when you come in the hour 1 time frame, that's where you can see this flag that's nicely spotted. Now we have our support level here. Why are we considering this support level? Because we can see whenever the prices come on this support level, we experience a lot of rejection. So now this particular level is considered. You can see that we had also a nice falling wedge here, which pushed also the price to the upside. Let me go with this. I don't know whether guys we are together. So now we had a beautiful falling wedge, broken up, came back, retested. We had an inverted head and shoulder, first shoulder, head, and second shoulder. The prices was a little bit consolidating, but it went all the way to our TP of this falling wedge. Now we saw prices coming back to retest this recent broken resistance level. After retesting it, we also experienced a lot of buyers jumping in back to the market. So now that's where in this consolidation we have spotted a beautiful pattern to see where exactly the market will be heading in the nearby future. Now we have already spotted our beautiful flag. Now what we want is to get a perfect entry. Now, like you know, for a pattern to be fully formed, we need to have a breakout and a retest. Now we have already seen that the prices have broken up. Now we are waiting for a retest. Now our stop loss will be put below this support level, because when the prices break this support level, that means we are no longer looking for buy entries, we shall be looking for sell entries. Now we are going to put our stop loss below that support level, so that to be secure how our trade to be in a good way. Why? We are trying to be protected, not to be stopped out by the market. Now for 75 1s, for those who are focusing on trading it, I think wait for a retest. After experiencing that retest, then you will be good to go. You can place your trades and you're ready to run. At the moment we had a beautiful flag. After this beautiful flag, we experienced prices or this push to the upside. Now we are waiting for a pullback which will be a retest. After retest, then you can jump in for buys. I think that pair is clearly analyzed. Now I'm going to head to the second pair, which is our last pair, which is volatility 75. Volatility 75. Now these pairs, they don't move in the same way. No, every pair has its own movement. I know some of you might think that these pairs, they move the same way. They do not move in the same way. Every pair move in its own way. So you must analyze every pair according to what you are seeing, not what you are expecting. That is also a nice character on how to analyze